Welcome back. Now, earlier this month, Ramkrishna Forgings held an analyst meet, and one of the big takeaways is that they plan that the revenues of the company will go up by 50% from the current 3,900 crore that they're expecting in FY24. It will go up to 5,800 crore rupees. The company also recently raised about 1,000 crore via a QIP. Lalit Khetan, whole-time Director CFO of the company, is with us now. Mr. Khetan, morning. First, if you could talk about this revenue guidance, how will you achieve 5,800 crore of revenues by FY26? How much of it will be via an acquisition? Is there an acquisition on the cards? And what is the organic growth rate that you're targeting?
So see, we have given already the guidance earlier. That's the 15 to 20% volume growth on the standalone basis. And all the acquisitions we have done in FY24, all will have start result in FY25. And the guidance is certainly on the back of these acquisitions plus the standalone growth. Altogether, certainly these numbers are very, very achievable. And certainly the improvement, what we are looking at when this acquisition stabilizes, so FY26 will be the optimum year for all these. And along with that, we very much see this 15 to 20% growth on standalone level to be maintained in terms of volume. So all these together will give us this kind of number. I think numbers may be better than that because a lot of talk on the demand side or demand picking up, but we don't feel like that. And if market remains good, we can do much better than that.
There is no new acquisition on the cards because you have raised 1,000 crore via QIP. This guidance only includes the acquisitions done so far.
Yes. So there is no acquisition right now on the card, and already whatever there is on the table, considering that only this is the guidance.
Sir, just a bit more on the 1,000 crores that you have raised. How much of that is going in capacity expansion, and how much will perhaps go maybe in paying off debt? Because some of the brokerages on the notes that we're seeing, they are expecting a very aggressive debt reduction strategy going forward. Is that something that you're planning as well? What will you be doing with the money?
Yeah, so certainly that's the main target of the QIP was to reduce the debt significantly, and we have been successfully able to do that. And if you look at our debt number, it was about 1,240 crore as on March 23. And after that, we have done a lot of investment by acquisition of JMT, acquisition of ACIL, and acquisition of Multitech Auto. And along with that, we have investment in the rail wheel project with the joint venture with Titagarh. Along with that, we have done a standalone capex of more than 450 crore in this financial year. Altogether, still we will have a significant debt reduction in the FY24 when the balance sheet will come out. You can see the significant debt reduction, and the trajectory will continue for next 2 years. And I think with the kind of free cash flow we are having, we see a really next 2 years we can be really almost no debt company.
So you've given the top line guidance and growth. What about the margin profile? I mean, how is that picture shaping up in terms of raw material costs, etc.? FY26, what can we expect on EBITDA margins?
So see, what we right now at standalone level, we are somewhere around 22.5 to 23, and we expect the margin to raise by 100 to 150 basis points in FY20 by FY26. That's our thought process. On the console basis, the same. Console basis, we are somewhere around 21 right now, another 100 to 150 basis point rise in the console basis also.
Will you achieve that?
Yeah, we are very much confident to achieve that.
No, sir, how will you achieve this 100 to 150 basis points increase?
So certainly, see, we are doing a lot of things on that. And if you look at, we are just entering a lot of complex products, or I will say assemblies, and economy of scale will certainly add up to that. So all these will help us to achieve that kind of margin. Certainly, a lot of cost optimization initiative also are in place in-house. And altogether, this will contribute this kind of margin.
Mr. Khetan, thank you very much for joining in and filling in with the outlook for the company over the next 2 years, FY26. We'll slip into a break. We'll come back with more on commodities.